Hello and welcome to the Friday wrap-up presented by the Goxteen News Network. I'm your host, Landy, and today is October 17th, 2025, and we're looking at Bitcoin, of course, here on the daily to start. We will talk about the weekly as there is some pretty important things happening with price right now. We did hit a major area to the downside, and we did get some daily closes below the range. So we saw the swing low dropped. This was a pretty high volume swing low, and we saw the lows of the weekly and the primary daily dropped as well, all on a close. So we have seen now that the bears have pushed us back and even below the 105 into the 104, 106 range, even hitting a 1272 Fibonacci extension from the prior macro cycle. So if we go back out here, and I know I've shown this plenty of times, and even floated that is an area that could get hit around 103.5. We actually did see that happen. So if we look here on longer term and of course shorter term time frames, it's going to be the same. We did hit the 1272 fib extension off of the prior cycle high to bear market low. So that would be 69 to 15.5 here on spot. Now this is getting a little bit of expansion to the downside. We didn't see it close below the lower second here, as the lower second just did move down with that lower first and the basis band coming down. And we did hit a pretty, key level. Now, in terms of horizontal support and resistance, I've mentioned that closing below the weekly higher low here, which this right here was a weekly higher low that was put in. Of course, this was also the base of price action on the daily that broke out of the 112 high and consolidation, downside consolidation structure that launched price to the tops up here. And this is a big area because we have a weekly high here and a weekly low structure. So let's go ahead and take a look at that weekly structure. And if we look here, we have our 112 high, right? And then we had a consolidation. So we've got a high side structure that we did see get hit. Not quite the next closing high structure here, but the closing high here. The next closing high would be here just below the 103.5 at 102.5. But realistically, we have this common zone between this closing high and this closing higher low. And yes, I know this was a swing higher high to swing lower low, because we had a swing higher low in between on a complex closing high to a just straight up higher low close. So this is a very, very important area where we see these highs and lows intersect. And this is kind of the zone now that needs to be recovered by the bulls. And this is going to consist of 107.250 on the downside area here, and that 112 high there that we did see a lot of the daily move consolidate, and was what defined the low here, was that daily move from this structure just prior to breakout to the new all-time high area. We're still in compression here on the weekly. We could see some slight expansion below the lower first on closes. And any closes below the lower first, which is right there at the last higher low on a weekly, and that is going to be something to watch, because if it is dropped, we're playing in the volatility zone of interest down to the 101 area. 101.5, 102, you could take the confluent highs over here just fine, but that's also the next big area on the weekly. So 101 to $98,000, 98,225 here on spot. And if that's dropped, that would be expansion into expansion into the downside support. So if this weekly is dropped specifically on the low side at 98,225, and even if it starts to close below 101, that would be expansion into the kind of the last area of support before getting to some structure over here in the mid 90s. Around $95,000, $96,000 also was the point of control over here. And I believe the point of control for the entire move up off of the $49,000 low. We can check on that in a moment. But that would be big, because that would be expansion to the downside, likely targeting the, not the highs anymore, the mid range, but all the way down to the next weekly level, which would be right around $95,000, $96,000 to $89,000 on the swing, where we do have a common area of interest here at a 1.168 at right around $89,000, where we saw essentially the swing come in at 89 of this range up here, where we saw the 109,360 high and the 108.4 high. This would be the area where we saw the lower high in the weekly come in before breaking back into the zone, making new highs and then higher lowing its way up, right? So big areas to pay attention to the downside, and really a big area to pay attention to the upside. If we do see over the weekend a close back inside essentially 107,250 here on a closing basis for spot, then we can look for moves up to the 112 and even the basis band on swings above and even higher into some of the daily areas that I'm going to talk about. But we need to see closes back above 112 to entertain trips, back to 120 to 123, and then eventually 123 to 125, and then the highs up here 126 to possibly 128, 130. That would be a really nice move off of compression. And often when we see an expansive Bollinger Band set into compression, both sides get tested before the actual expansive move. So we've gotten the upside test now. It is possible that we test the downside, and if we do see it close below and we hit support and then bounce back above it, it might just run right back to the other side. That is something that we do often see across asset classes and indices. And Bitcoin plays much the same way. Bitcoin plays really clean on the levels. So I'm going to tell you right now, where we have the confluent higher high over here and the higher low, bulls need to recover that. And specifically on a close, need to recover it on the weekly above 112. Otherwise, this is going to start to look like it needs to test the downside, and will test the downside, and could potentially turn into a more bearish weekly scenario than is already being presented here. Because as it stands right now, we have a complex higher high close, right, with a swing down, a swing uptrend break into a lower low swing that created a higher low close, and then we had a lower high confirm. With a lower high swing and close, and then a higher low swing to a higher high swing and close. So right now we are trendless. This is a consolidation structure awaiting confirmation of expansion to either the upside or downside. So anything in between the bands and the support and resistance levels doesn't really matter too much. Provides for some great macro weekly range trading on the lower term time frames for sure, but realistically there's not much going on here. And we can take, and I believe I drew this out on Wednesday, I don't remember quite honestly, but big zones to pay attention to. Excuse me. Between meetings and then I didn't really do a lot of spaces, but a lot of meetings today, so forgive me for losing my voice a little bit here late on a Friday. But we can kind of do the stoplights here. Above the green zone, we'll see expansion to the upside. Below the red zone, we'll see expansion in earnest to the downside. And then we can start picking out levels, $95,000, $96,000. Before the big breakdown, there was also the point of control in that range. And then the low side structure at 93.5 to 89 essentially would be the next biggest area. That's actually confluent, and I believe I might have shown this. I don't have it up here. I'll just show it again on Monday. I don't think it's going to matter too much right now, but there's like Charles Edwards has his Caprioli.com. It's 3-week trailing data for minor electrical costs, but that's right around $88,000, $89,000. Or I'm sorry, production cost is right around $88,000 to $89,000, somewhere around there. And electrical cost is somewhere around $70,000 to $75,000. I think I might have shown it on Wednesday. I don't quite remember, to be honest. But it's a pretty simple setup here on the weekly for the macro time frame, like a weekly. And again, a lot of this, we have to keep in the context of what's going on with the monthly, right? So with the monthly, we can see that, it is still a bullish structure. It does look as though it wants to put in a higher high. And the next big monthly area to pay attention to is that 102.5, which is also relevant on the band setup as well, and some of the weekly closes up there, right? So that's the next weekly below. We already touched the top weekly from this range over here, and then the next weekly below is actually where the monthly close came in at 102.5 or so. And it's not until we see a break of structure below the last higher low in a monthly that things actually turn bearish. The danger for the bulls is going to be that, there's some sort of a swing higher low prior to that puts in a lower high and then changes structure. So that is the structural danger for the bulls right here, but not anything too crazy right now, but like a swing higher low, or maybe even a closing higher low if it is like a 3-candle structure or something that puts in a lower high and then takes out that higher low, and then we're going into a bearish period testing down further. Any kind of moves that also come down and break down or break the uptrending structure on the monthly, of course, are going to be more likely to throw that lower high, whether it's, up near these highs or even way lower and just nukes. That's the danger right now. And it would fit a lot of the macro cycle timing for the 4-year cycle, for Bitcoin and liquidity cycles. And I know there's a lot of people that are looking at like, no, it's the business cycle. No, it's that cycle. It's this cycle. And it's like, well, one of the big things though is that there's a lot right now that's happening in the crypto markets, and specifically with Bitcoin and Ethereum, that I think is very different than last cycle, right? Like we did have bigger players in last cycle, and then we had a lot of things collapse all at the same time, right? It was bigger. A lot of people forget, a lot of the big collapse of, the futures ETFs, right? Where they didn't have to hold spot, or the, Celsius, BlockFi, and what was the other one? Voyager. Everybody just knows or thinks about the FTX collapse, but there was things that were happening before they collapsed. And, we're in a very different environment now when it comes to traditional market players in the game, because we have a ton of very large asset under management companies that are picking up spot for their clients, right? They don't hold it directly, by the way. These are portfolios that they manage that are buying in big on the spot ETF side of things, right? And it's been a very consistent thing to watch, and between that and the consistently inconsistent bid of treasury companies is very highly likely going to provide for a higher floor when things do eventually turn into another bearish weekly structure. And, could leave the door open for structure to remain intact on higher term timeframes like the monthly, and provide for an extended cycle. That is, the door is wide open, but until we meet those conditions by either expanding to the upside or putting in another higher low and then expanding to the upside through the timeframes, we're still in that Q4 to Q1, right? Q4 of 2025 to Q1 of 2026 kind of cycle timing timeframe. So we have to see structure maintain through this time period, through the end of Q1 into Q2, and then we need to see an expansion to the upside, right? If it happens even in between Q4 to Q1, it's still within the margin of error for cycle timing. So just understand that, like, the door is open for an extended cycle. Some are going to call it a super cycle. I hesitate to call anything a super anything. I mean, the only super cycle that we've seen is meme coin speed running cycle theory, having a bull market, bear market, bull market kind of stuff, right? Like that's the only thing is like, it implies that, we could see a macro, extended cycle for Bitcoin. Could it potentially pull gold ETF? Sure. It's like way undervalued versus gold. The Bitcoin gold trade has favored the gold side for a while, right? Since 2020, 2021, it's 2021, the two highs, basically, we haven't really broke out above that, with Bitcoin paired to gold, and everybody's, talking about it, right? The fact of the matter is it's up 410 million% versus gold since inception. So you're going to see a consolidation, and it looks ugly versus gold right now. But I imagine, just purely due to fundamentals, it's going to catch up. Also, it needs some consolidation against gold. I've been talking about this for a long time, actually, so it's good to see so many people talking about it now, this cycle. But realistically, for Bitcoin versus, the US dollar, fiat currencies right now, it's fine. It's in an uptrend. And until it actually breaks down on a longer term time frame like the monthly, well, trend is intact. The warning would be, watch the weekly. If the weekly goes into a downtrend, we need to see some of these key areas hold up. And if we start to see them break down on the weekly and then break down on the monthly, well, that's our warning that the next, bigger bounce likely going to turn the macro structure bearish, right? Especially on any kind of a macro trend break like a monthly. And yeah, I mean, there's not too much else to say. We hit a major level. And let's go to the daily real quick here. And I know everybody's like, well, what about Ethereum? What about this? What about that? Look, right now where Bitcoin goes, the rest of the market's going to go for crypto. So let's just pay attention to Bitcoin. If it meets the conditions of providing for some further upside, that would be very good for the bulls and very likely very good for the altcoins as well. But let's go ahead and check the local structure here. And we're going to have to go to local support and resistance zones of interest on the daily. And this is that big zone, right? I did separate it out based on close and swing for the higher low structure, and then the high side structure up here for that 112 and 109 close. So look, if we continue to break down below the main the main daily area down here that was kind of spiked through to hit that 1272 fib retracement, or fib extension rather, below 105, very highly likely going to try to fill this wick out somewhere around that 104 to 103 and a half. If it does drop it, of course there is front runnable areas down here in the 102 and a half to 103 on swings. But it's very highly likely going to favor a move to that larger area of liquidity down here by the 101 to 98. Now, on the other side of that, bulls can give themselves a chance here on the weekly if they can recover that the higher low closing structure on the weekly. So basically get above the 107 swing low here. That was a very high volume swing low. So breaking below it is not a good thing, to be quite honest, and closing below it's not a good thing. It implies that it needs to be recovered quickly, meaning that more than likely we want to see it recovered by Sunday. And that's where closes back above, the 107 250, just slightly above that swing low. We can start to eye that 108 220 or 250 area. That would be, an area that, the bulls can maybe provide for some false hope but at least give them a little bit of a head start to try and move up into the bigger area. And that's get above this prior high side structure on the weekly for the close here at 109, and then battle with the dailies inside of this weekly around the 109.5 to 111, and then really push towards that 112. We saw the rejection here after the big spike down. So we did see the higher low that I warned about. Higher low close, but lower low swing says beware of that overhead resistance. We got a pretty much perfect rejection at 116. This big zone 116 to 118 is the structure change that we would need to see on the daily. So a low being set, whether it's here or lower, as it stands right now, the last lower high needs to be beat to break the downtrend. And then we can start looking for higher low, equal low structure as it relates to wherever a low comes in down here. So essentially what the bulls are looking for by this weekend on this move is for this to kind of, maybe bottom out and then start closing back above the 108, 250, somewhere inside of this 109 to 112 zone, right? And then either put a lower high in, come down higher low, its way into a trend break. So set up a trend reversal to a trend break. That would look good. Or, start to, from here, it's got a lot of work to do to go up and beat the last, lower high, right? To put in a higher high and then come down and put in a higher low versus the last, wherever this low will form, whether it's here or lower. And that's where we have to see a structural change on the daily to even for me to be entertaining, any sort of a concerted effort at a reclaim above. Obviously, lower term time frame into weekly reclaims on closes are going to give the bulls a chance, in my opinion. Otherwise, I do think that the bias is to the downside to keep testing down into, 105, 104 to 106, daily at 105, possibly back down to the 103.5 if it starts to break down below there. On longer term time frames, I'll be honest with you, it can pull up short of this 101 to 98, but I think it eventually gets there. So bulls want to see a recovery above 108, 250 at minimum this weekend on a close. Give themselves a chance to look even better above 109. Give themselves a chance at that 112. Above 112, we can start entertaining. We've got enough room, especially if a daily low is set. We've got enough room to possibly put in a lower high, equal low, and then come down for a higher low, equal low structure to break that. Otherwise, it's got to bounce all the way back up and close above 116 from wherever this low comes in to break the downtrend and set up a possible trend reversal on a higher, lower, equal low structure. So give it time. It's not, by the way, I'm seeing all kinds of people pissing their pants still. Nothing on the macro. Like I pointed out the monthly for a reason. The real thing that we have to watch out for here is the monthly. Do we put in a higher low? Again, like locally, anywhere above that 82.5. This area down here, this would be our monthly. This is what needs to be watched. And let me come over here. Do we put in a higher low on a monthly time frame, either on a swing or a close, above 82.5 to 74.20, 420.69, right? And then lower high and then break down from wherever that area would be, right? That's what we need to watch for. And I think it's a little less important to sweat all of the moves in between. But we obviously can get our edge based on where the weekly is headed. But realistically, it's about like, okay, do we get a lower low than this? And then we get, a lower high, whether it's here or lower, doesn't matter. And then start our downtrend, right? Because that'd be a trend break, the trend reversal setup on a macro time frame. You can do that and you get equal highs or slightly lower highs or dramatically lower highs. Doesn't really matter, however that plays out. Or do we get something like a higher low and, off of some key levels, let's say mid 90s. I'm just speculating, and then equal highs or lower highs, or a swing that fails here, or even a higher high that then breaks down from like a higher low structure. That would be your structure break, and that's your warning that we're entering bear market territory. All right. But usually you're going to see the weekly tip its hand well before the monthly. So we're going to have to keep a very close eye on those weeklies. So this is the time to pay attention. The next few months, the next 6 months or so is the time to pay attention. Because within that time frame, we're going to find out a lot about whether or not cycle theory is dead. And this is going to go into an extended cycle. If Saylor and all these treasury companies are, if their theory of buying out the emissions rate for the halving to force a price halving is going to be something that comes to fruition or not. We'll also find out on any kind of bigger downside moves from here. If it does get any bigger downside moves from here, this is an area that I was, bidding anyway. I was bidding just above, and I mentioned on, actually, let me break this down because everyone knows and got on my case last week when I was building shorts on Monday, Tuesday, because we were going to break out to go to 150, 100, 200, 300, $400,000 and whatever, right? Well, here's the thing. I was building shorts on the top side, and that was based on some lower term time frames. And then when we spiked back up to the 123 area and failed, I fleshed out the short side. And what did I tell everybody? I told everybody earlier this week, What have I been doing in this weekly and daily zone? I built out another swing. I have an overweight an overweight short position that I'm building a swing against to hedge against that short. I will let it go if 107 is dropped and build lower. Well, that's exactly what I did. So I got taken out of that position on the closes below 107. And now I have begun to build that swing back up. And I'm willing to build that swing position now all the way down to the next macro level, which is the weekly level for me at 101 to 98. And that is all a hedge against my short position. And my short position is a hedge against my spot portfolio. So it's still an overweight short position, but I am now still swing long. I got stopped out of that position at a slight loss on the swing long side because I was building right on the weeklies and in the weekly zones between the 109 to 112 zone. I was building it. And then I started to build it again on the daily and weekly zone down here because we had the weekly high side structure and the weekly low side structure over here. That's also the dailies, right? So I continued to build that even right up to the edge at 107. But when 107 dropped, I immediately got stopped out and then started to bid again, right? So to reposition my entry price. And I will continue that bid all the way down to the 101 to 98. I'm willing to take a loss on that. I have quite a sizable short on if that were to drop below and build the next levels down there. It's just a hedge against my swing short side. So the swing long is going to be a hedge against the swing short so that I can bracket. When does that change though? That changes on a structure break. So right now it would have to change. I would change my outlook on things, especially for the short side of the position on any kind of daily structure break above 116. That I will update you on because if we come up and make a lower high, that could be, let's say the lower high comes in at 112. If the lower high were to come in at 112, that would be where I start to entertain a structure break and then trend reversal setup. But we're so far away from where I was building that position up here that I am not concerned about it, especially with a, lower low swing, lower high, lower low confirmation of a trend reversal setup on the daily. But it's all going to be about the next bigger bounces, right? And do I see the structure change? Because then that will change how I position each side, right? Whether I go more weighted on that long side and as I'm taking profits on the short side, right? That's where I'm going to make the bigger adjustments. And I've spent a long time talking about this today, but I think it's been very important for me to get my thoughts out there in a video format. And I hope that everyone has been watching because none of this was really a big surprise. We've been prepared for these moves. If you've been watching, talking about them, I do like that we spiked the 103, 645. The problem is we didn't reclaim the low at that 10. We didn't even reclaim the wick low. But if we do, there is some opportunity to the upside to start trying to make some ground up. Otherwise, it could keep testing the downside, right? Just watch it over the weekend. 108, 250, bare minimum on the weekly. 109, better. Inside that 109 to 112, around the 110 region to 112, great. Above 112, oh, bulls, you pulled it off. Maybe you can have a legit shot at going for that lower high break. But realistically, it would be more about the daily structure, getting away from wherever the low comes in, giving themselves room to try to put in a higher, lower, equal low structure. Until Monday, I hope that you have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. Have a great weekend. Be careful over the weekend. We've gotten some pretty crazy moves in the lower liquidity environment. And I'll be back at you here on Monday with my thoughts on the weekly close and what the outlook looks like for next week. Take care of yourselves. Landy out. Take care. Bye. Should I say take care again? Maybe. Yeah, take care. Toodles.